This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Bonds rallying as a cooling US labour market bolsters bets on Fed rate cuts this year. Asian stocks are set for a lower open. Also ahead, the yen gains with the BOJ set to discuss cutting bond purchases. We'll get Japan's economic outlook from the executives at Monex, Komatsu and Suntory.
And I'm Haslinda Amin in New Delhi. Narendra Modi vowing to stay on as Prime Minister even as his party loses its parliamentary majority. Indian stocks suffering one of their worst days on record on the shock result.
We are getting just South Korea GDP numbers just crossing the Bloomberg first thing this morning. This is the picture as we see 1.3% of a rise quarter on quarter. That was the same as the previous estimate. This is the revised first quarter GDP in a statement from the Bank of Korea. First quarter GDP expanding 3.3% year on year versus the 3.4% in the previous estimate. If you want to break that down when it comes to some of the subsectors, first quarter manufacturing seeing a growth of almost 1% there, 6.5% year on year. Construction growth seen at 5.5% quarter on quarter or 3% year on year, and services, that component there, up by 1.9% year on year there as well. So we continue to watch, given that we had some data yesterday that sort of more or less came in line with estimates. Still, it's likely that the Bank of Korea is going to want to see a lot more in terms of potentially where we go from here. There's been some concerns that the April rebound in industrial output wasn't quite strong enough to offset some of that sharp retreat that potentially, Shery, portends a second quarter GDP slowdown for Korea.
Heidi, we've had stronger than expected data, though, recently from South Korea, as you mentioned, right? Especially given that exports are doing pretty well with the semiconductor sector. But when it came to the Kospi in the previous session, we really had that downside pressure across the board in Asia because of the volatility stemming from the India elections. Right now, we're focusing on the ASX 200 futures. Of course, we do have those PMI numbers crossing the Bloomberg terminal, so watch out for that. Not to mention that we have the RBA governor also speaking in Parliament. But we're paying attention to Nikkei futures. Really not doing much at the moment, but this, of course, after the Japanese yen strengthened a little bit. We're trading around those 155 levels. Really a function of what happened in the overnight market. We had U.S. futures looking like this, given that we saw a little bit of gains for the S&P 500. This really to do with the Treasury yield plunge continuing. We had weaker than expected job openings numbers, really falling the most in over 3 years, Heidi.
And of course, front and centre is really today's agenda when it comes to India. And what a shocker it's been. And obviously, we saw that market reaction. But we are getting sort of more confirmation in terms of the direction of this vote count that there is some degree of continuity that we can still expect. Modi's coalition, that narrow window, putting that 8% India growth plan now at risk. The BJP will need to rely on coalition partners to enact that policy. Obviously, Modi's goal was to is to sort of fast track the way to a developed nation, and he thought that he was going to do that with a much stronger result in these elections. But this race to form government, the opposition really delivering a shock here to markets.
And the question for investors is about that continuity that you mentioned, especially when it comes to challenges in implementing some of those tough political reforms on labor forces and land property rules. But given that uncertainty, we saw that plunge. $386 billion wiped out of the Indian markets. And you can see there the Nifty really seeing the worst day since the global pandemic, and some of those Modi stocks that could benefit also from Modi's election really taking a hit. Adani's wealth being wiped out, $25 billion in one day.
So, Shery, as we've been talking about Narendra Modi vowing to stay on as Indian Prime Minister, even as the opposition delivered that election surprise.
Today's victory is the victory of the world's largest democracy. This is the victory of unbreakable allegiance put into the Constitution of India. In our third term, this country will see a new chapter of big decisions. This is Modi's guarantee.
Let's get to our Bloomberg Markets Asia anchor who's been covering the vote count from New Delhi. Haslinda Amin joins us now this morning. This is quite a blow to Narendra Modi, given what polling was suggesting, just how strong the results were supposed to be.
You're right. It is a huge blow for Modi. In fact, one political analyst said that this is not an election. It is a political earthquake. I mean, no one saw this coming. And the fact that the Indian stocks dumped about 8% at one time says just about everything. Now, after the vote count, this is where it stands. When it comes to Modi's BJP party, they secured 241 seats. Yes, it is, they won the most seats out there, but well short of the 272 that was needed for a single party majority, something they've managed to do in the last two elections. Essentially, what that means is that Modi will have to tap its allies, the two parties in its alliance. The problem is this: yes, they could go the Modi way, but they could also decide to join forces with the opposition. This is where it stands. The two leaders of the two allies have a history of flip-flopping in terms of its allegiance. In fact, the two parties joined Modi's alliance just several months ago, putting in question whether or not Modi will secure their trust, their vote, and their seats. So, in fact, the whole position for the BJP is in question, along with Modi's position himself. Remember that BJP is as strong as Modi. Modi came to power 10 years ago, and that brought along the power of the BJP. That is now in question. Modi took to acts late yesterday when it was quite clear what the situation was. He claimed victory. He said this is an India that he wants to lead and wants to continue to lead. But it is not the same Modi, and it is not the same India. Democracy has spoken. Remember, this is a country of 1.4 billion people, and they have voted for a country that they want.
So, Haslinda, during these extraordinary 6 weeks of voting, where were the toughest battles fought?
Well, for India, the election is won and lost in the Hindu heartlands. We are preoccupied with the Adanis and the Ambanis of India, but it is not where the elections are won. Case in point is Uttar Pradesh. This is the most populous state in the country. 80 seats were at stake. In the last election in 2019, the BJP garnered 62 of the 80 seats available. This time around, they managed only 40. Now, remember that this is a state where it is populated by the rural poor. Most of them are farmers. Most of them are poor. And Modi's promise of growth has not translated to jobs, has not translated to food on the table. And they voted for the basic necessities for them. Modi has promised hope, promised wealth, promised growth, but they are struggling on a daily basis. The cost of living is hurting them. This is also a country where 800 million people benefit from free grain from the government. So it gives you a sense of what the struggles are for the people. Uttar Pradesh voted against the policies that Modi has adopted. Uttar Pradesh is where it is clear that Modi has not worked for them.
Markets co-anchor and chief international correspondent for Southeast Asia, Haslinda Amin, there in New Delhi for us. We'll be getting more from Has throughout the course of the day as this result continues to percolate through markets. Let's bring in Julius Baer, head of Asia Research, Mark Matthews now. So, Mark, when you take a look at the outsized market reaction, and maybe you don't think it was an outsized reaction given the magnitude of how much this result really shocked expectations, do you think that this was an overreaction? Do you think that this really does put into question the longer-term growth path for the country?
I don't think it was an overreaction, Heidi, because it's a shocker of a result. And there's no doubt, I can't put a number on it, but there's no doubt a major part of the bull market in India over the last few years has been the results of the reforms that this government did in the previous two administrations. And so the question is, without a majority in a third administration, will it be able to enact even better reforms, which had been to some extent priced in the market? And as Haslinda said, things like land and labor reform. So I can't put a number on it, but if I had to, I'd say maybe 20% of the bull market was sort of attributable to that future promise, which arguably is in doubt because the two parties that Modi will need to have a majority are fickle friends, and they will be more concerned about their own states of Bihar and Andhra Pradesh, respectively, than they will, building infrastructure and creating a manufacturing base across the entire nation. That being said, there's still, as is 80% of the story which is intact, in my opinion, which is all the good news that remains in place, which is the great demographics of the country, truly unique in the world. No other country has the kind of population growth in front of it in the prime money-making age cohort of 30 to 60 years old that India does. 150 million new people will join the ranks of that age cohort over the next 20 years. There's no other country like that. China is going to lose about 120 million in that age cohort over the same period. You have 7.8% GDP that they registered in the January to March quarter, which makes it one of the fastest growing economies in the world. And that momentum, I believe, will continue regardless of whether the big reforms we had hoped for get passed or not. And maybe I'll just add one final thing, is that the JP Morgan Emerging Market Bond Index will include India as of the 28th of this month. You have the Bloomberg Barclays Global Aggregate Index and the FTSE Bond Index, which may follow. And that could result in a lot of money coming into India to invest in its bond market over the next year, year and a half. I put it all together, and I don't want to get bearish on this market. That would be the wrong thing to do.
So maybe we call that 20% the sort of Modi premium that gets shaved off the top of, still these very well-performing markets. I do wonder, though, because obviously this was not just, Modi as a very effective economic administrator. It was also his political personality that was on the ballot this time, right? So is there a sense that investors kind of need to contend with either a weakened leader or potentially in the future a different sort of leader for India? And does that create more uncertainty, or are the structural strengths of the economy going to still propel it through?
Well, as Haslinda said, it proves this is a democracy, and as Prime Minister Modi himself said yesterday, this is a democracy, and I think we should celebrate that, right? I mean, goodness knows there's enough problems in the world with countries that aren't democracies. We could use a few. So I'm very happy that this proves that India is a democracy. And as to his charisma, his leadership, I doubt that will change. But there's no doubt, and to Haslinda's point, in those big populous northern states like Uttar Pradesh and Maharashtra and Rajasthan, it is clear that the rural people have expressed that they want more, and that they've got to take the money from somewhere. I suspect that it means less invested in infrastructure, which is important toward developing a manufacturing base. You need the infrastructure, and more, kind of welfare for those poor people in the rural north of the country. And I can't really say that's a good thing. But it's reality, and just want to reiterate, doesn't change the fact that it's a great economy, and I think will still be a great stock market.
Mark, we've been talking about the attractiveness of Indian stocks for a very long time. So what are valuations looking like now?
Well, if memory serves me right, it's on around 20 times this year's earnings. But if they do get, let's say, 6, 7, 8% GDP growth per year, this is the only emerging market that I know where the GDP growth actually gets translated into earnings growth. For some reason, in all the others, what happens at the top line doesn't get down to the bottom line. And I guess it's because in many of these other emerging markets, they just don't have the scale that India does. So the owners of companies are more preoccupied with maximizing their own, sort of personal gain. and less preoccupied with trying to grow their whole company. And in India, I think because the growth is so big in front of them, 1.4 billion people, most of whom are young, the owners of companies are saying, well, I'll grow my whole company. That's how I can become wealthy, instead of trying to figure out ways to maximize my personal gain. And that translated to good earnings. So if the earnings are, I think they should be about, let's say, 12 to 15% per year over the next 3 years. It's not an expensive market.
Okay, so how about when it comes to the connectedness of Indian markets and businesses? And I asked that question to just gauge if there will be implications for other Asian markets if, in fact, Prime Minister Modi does have a harder time in enacting policies this time around.
I don't know really how to link it with the other Asian countries. I think everybody's in their own kind of orbit. So I can't really make a link there. I apologize. No.
Julius Very, head of Asia Research, Mark Matthews there with his insights on the broader Asian markets and India in particular. But first, Palliser Capital says Rio Tinto should abandon its primary listing in London and unify its corporate structure in Australia. The activist investor tells us why next. This is Bloomberg. This is the Asia Trade. Take a look at how we're setting up for the Japan session. We are seeing the Nikkei holding steady at that 154 level, below 155. A little bit of strength, but mostly to do with what's happening in the U.S. with those Treasury yields continuing its downside. We're seeing Nikkei futures down 0.8%. We had lost ground in the previous session. But when it comes to activist investors and activism in the Japanese markets, well, this year is expected to be another busy one. They want to shake up corporate Japan, spurred by the government and institutional pressure to improve corporate governance and boost valuations. Activist investors are pursuing more high-profile investments. Joining us in the studio is James Smith, founder and CIO at hedge fund Palliser Capital. Great to have you with us. So it's June already. What are you seeing so far? Are we going to keep up this momentum?
I think that's right, Shery, and thanks for having me on. I think the momentum is really strong, led by institutions like Tokyo Stock Exchange, and I think it's going to be an interesting AGM season.
You've been very busy here in Japan as well. I believe you took a stake in Keisei Electric Railway as well. How busy are you in Japan?
Looking at a lot of opportunities in the Japanese market. Keisei has been a large project for us, as you may be aware. We have around 2% of the company, and we've put proposals into the AGM, which is happening in a few weeks. So it's a busy time.
And they've pushed back, saying that some of the changes that you've proposed are very nearsighted. And I think a lot of the corporations here in Japan, when they see foreign investors come in, is the first thing they tell you is long-term, that's not good for us. How do you counter that sort of corporate culture?
Look, in the Keisei case, I'm aware they have suggested that we're perhaps short-term. We've been in discussions with them for 3 years now, almost, since we launched our fund in August 2021. I think it's a bit of a stretch to call 3 years short-term. And we take a different view that what we're putting forward has got long-term benefits. People
might push back on that, especially given that it's Japan and all of these changes happen very slowly. But I wonder if we're going to see more bolder measures when it comes to pushing these Japanese corporations for change, because that's really led to a lot of optimism in the broader markets, especially foreign investors looking at Japanese assets.
Look, I think it's definitely the case with the pressure from Tokyo Stock Exchange that the bar has raised and companies do need to do better. Picking the companies you invest in is obviously important. And I do think we're going to see a wave of more comprehensive change from a lot of issuers. So we're excited about that.
James, what are the sort of thematics and perhaps sectors that you're looking at when you're taking up positions in Japan?
A variety of things. We're looking for companies where there's a consistent, solid return on capital employed or potential for that. and where there's latent value that can be unlocked from progressive steps but taken by management. So a real variety of sectors, Heidi.
And, you know, we've obviously talked about the sort of final success story after a decade in terms of making progress on governance, and we're seeing that optimism in other markets like South Korea as well. I do wonder, is it becoming easier to talk to boards, to talk to Japan Inc. And members thereof about making these changes? Do you think there's more receptiveness in these conversations now?
Yeah, it's definitely been a positive change on that side of things. And if we take the KSA case as an example, we've been pleased to meet with the CEO several times. And I think there's an environment where C-suite level conversations are easier. And when you have thoughts to put forward, they're received in a more constructive, positive way by companies.
James, are you able to give us an example or some examples of some of the more interesting positions that you have right now in the Japanese market?
Yeah, so I think I'd mention the Keisei investment we have. So this is a company where its intrinsic value is derived 80% from a single stake in a passive investment they have in a company that runs Tokyo Disneyland. When you rectify the accounting and you sort of pick away at that, you realize it's trading at a deep discount to book value and an even deeper discount to peers. So that's one where we've put a proposal into the AGM. We think there's a really exciting upside opportunity. So that's, I think, a good example to illustrate things.
Are there others that you are also excited about other than Keisei?
Yeah, we've got a variety of other companies in the portfolio, none that we're public on, that we're talking in depth on at the current time. But I think a lot of situations where, you know, there's a good chance you're going to hear more.
I wanted to get some comments from you on Rio in terms of sort of the, you know, obviously the stake that Palliser has taken and the kind of desire to unify this listing. Are you able to tell us a little bit more about that in terms of what you want to see?
Yeah, so Heidi, this is one that we presented probably around 10 days ago at the Sohn conference in Hong Kong. Not too much to add at the present time on that, other than to reiterate the comments that we made, that by unifying those two listings of that dual company structure, there's an awful lot of upside, and it'll unlock a lot of positive optionality for the company, which we think is very exciting.
When talking about company structures, we have seen really a lot of difficult corporate structures across Asia, and one market that comes to mind is South Korea as well. You talked about the Tokyo Stock Exchange actually doing pretty good things that could really encourage more transparency, but what about the South Korean market, especially that the government wants that corporate value app program, but it's really disappointed investors.
Yeah, that's right, Shery. There's definitely an initiative and an effort in Korea to mimic some of the improvements that we've seen in Japan and are ongoing. I think it's early days. I think there is an intent to improve things, but the devil is in the detail. I think they're still working through exactly how they're going to bring companies to really perform from that perspective. In particular, given, as you mentioned, they're oftentimes very complicated corporate structures and organizational charts.
Do you have positions in South Korea?
We had a number of positions in South Korea. We made public thoughts on Samsung C&T at the end of last year, which have been picked up in the public domain. And that's one of a number of companies with those complex structures where you're seeing discounts to easily calculable intrinsic value of 60% plus, which is obviously a very, very attractive entry point for people looking at that market.
Do you feel that there's any difference in the reaction that you're getting from Korean businesses as opposed to Japanese?
It's probably too early to do a complete compare-contrast. We're encouraged by a greater willingness in Korea of more senior executives to engage with shareholders. But it's another market where, like Japan, I think patience is key, and sort of respectfully listening and thinking through the position that the company is explaining to you and their views is a really important part of the process, and just taking your time.
When it comes to government momentum, where are you seeing that the most across Asia?
Look, I think definitely Japan. I think the momentum's so strong here. As we've mentioned, places like Korea are trying to do a similar thing. But it's a little bit more complicated for them and earlier in the process. So definitely Japan is a bright spot from our perspective.
You talked about some of the measures that the Tokyo Stock Exchange is taking. Are there any that could be mimicked across other markets that you think would help?
Yeah. So I think this focus that the Tokyo Stock Exchange has put forward on looking at your company's returns, examining why, if they're not more than the cost of capital, they can be, and really attempting to take a path that allows you to achieve a valuation above book is a really sort of thoughtful and well-expressed concept. And there's a lot of scope for that to be rolled out in other jurisdictions like Korea and perhaps other markets in Asia.
James Smith, great to have you here in Tokyo in our studio, founder and CIO at Palliser Capital.
Thanks so much for your time.
Coming up on the Asia Trade, we'll chart the BOJ's rate path and its impact on the yen with Monex Group later this hour. Plus, catch our exclusive conversations with the executives of Suntory and Komatsu in the next hour. And India also in focus with the Center for Strategic and International Studies. Coming up next, we'll speak exclusively with Tokyo-based financial services company Monex Group on their outlook for the BOJ's policy path and the yen. This is Bloomberg. The Japanese yen is trading at the moment. We are seeing it at that near 155 level against the dollar. We saw it really gain ground against major currencies. More a function of what the U.S. is doing, lower Treasury yields following that U.S. jobs data, falling to the lowest level since 2021 when it comes to job openings. Of course, we have seen currency intervention in Japan, the finance minister really having his first acknowledgement of the action. But let's discuss all of the Japanese markets and bring in our next guest, Oki Matsumoto, who's the executive chairman at Monex Group, who joins me here in the Tokyo studio. It's great to see you in person.
Thank you.
So let's talk a little bit about the Japanese yen and the broader Japanese markets. We have seen a lot of optimism over Japanese assets, but at the same time, perhaps a little bit more caution because of what the weakness in the Japanese yen could signify in terms of where the economy is going.
Well, the currency is really kind of different annual, so I can't comment a lot more. But it is really true. Japanese society is now changing, driven mainly by the generational change from the older generation, from the now generation. It's the older generation. They had a huge success experience after World War II, so couldn't really change the way they were doing when they started seeing some problems. But our generation never saw the success experience of of Japan, so we are more open-minded. So that is kind of main driver of Japanese society or economy is now changing. So compared to that, the weaker yen is just one kind of temporal move. It's a function of the interest rates and others. So I'm not so worried about it.
But others might argue that it's also to do with a function of where inflation could go from here. And really, there's a whole generation that's never seen inflation and price pressures. Being in Japan, I hear from a lot of people that companies don't know how to raise wages or how to raise prices for consumers as well. Do you think it'll take more time for people to adjust to actual sustainable inflation?
No, but the last 2 years, Japanese companies did raise wages, 2 years in a row, like 4%, 5%. And also they started raising prices like 2 years ago. So it's, and people get accustomed to things very quickly. So just up until like 2 years ago, yes, Japanese management couldn't really raise wages prices, but now people feel more comfortable doing it. So it's really changing.
We're just talking to Palliser Capital, and James Smith was telling us about the change in that mentality, especially when it comes to improving corporate governance. Will that be sustainable enough to really boost assets further when we have seen already a rally in Japanese stocks?
Well, if you think about Japan, if it's how to allocate the human resource, or how to allocate the production factors, how to allocate capital, all of those three things, Japan's been really, really bad. You know that, right? There is an age, seniority system and everything. So we didn't really allocate those resources, but yet Japan's been producing like world number 3 or number 4 of GDP, which is amazing. It's like running with the iron shoes, but still
managing to get somewhere.
To get number 3, right? So if we start changing those resource allocation, we can do much better. So that kind of thing is now happening in Japan. So it's not very visible because it's happening all over the place. But it's very irreversible, strong change happening. So I am very optimistic, constructive to Japan.
Making strides despite wearing iron shoes. I really like that analogy. In terms of some of the things that can change and have been changing, investor attitudes, of corporate boardrooms, for example, do you think these things have been improving to a level where that is helping Japan's competitiveness more globally?
Well, it's not to the perfect level yet, but it is for sure changing. The accumulation of the corporate governance reforms in Japan, accumulation of the ISS or the grassroots of those people kind of coming up with new, stricter standards, and also the TSC and the activists and everybody, kind of providing more pressure to the Japanese corporate management. So accumulation of all of those are now making them change. And I think, as I said, the biggest issue is not only all those outside pressures, inside the corporates, the managements are my generation or younger who are more open-minded to the global standards or best practices of the world, because we didn't see the huge success of Japan in Showa. So we are more open-minded. So that is, I think, a big factor.
We've heard from some corporate leaders, including Morgan Stanley's Asia CEO, saying that they could actually see Japan catching up to the likes of Hong Kong and Singapore in terms of being a global financial hub. Do you think this is a realistic goal for Tokyo? Well,
you know what? Japan, as you know, the beautiful place, safe, clean, kids can walk around at night. So there are many reasons for people to come. But for those, for Tokyo to become the hub of the asset management business, I do strongly believe that we do need to change the tax treatment for individual people. At the end of the day, this asset management business or financial business is a people business. We do need to be able to get the high-paid, strong boss to reside in Tokyo. So we have to think about how. Currently the tax is too high for them being in Tokyo, being in Japan. So we should change that. But as long as we change that, I think we can be way much better off than Hong Kong or Singapore. I don't hear anything.
Well, let me take it from here then, because we are trying to figure out the labor cash earnings numbers coming out, and I think Haidi and I were just looking at it. And you can see that year-on-year has been growth of 2.1% for the month of April, and it's really beating expectations. As you said, we are seeing that wage growth come through. And as we're getting those numbers, we're also seeing the yen edging lower, given that the numbers really surprised to the upside. But despite the fact that we are seeing these changes in Japan, it seems that when it comes to Japanese investors, they're still sending their money overseas. Are you going to see a change in that sort of trend with more domestic investors being more confident about the Japanese markets as well?
That is really a good point. With that NISA, that new Nippon Investment Saving, program, whatever. As you know, the many money went to abroad. Okay. Ironically, last year the best performing asset of the world was the Japan equity, even in a dollar term. This year, in the local currency term, still Japan is the best performer. In the dollar term, no, because of the weaker yen, but still in a good performing. So it takes a little bit of time for people to realize, because people behave based upon the experience in the past. So we did see that the Japanese equity didn't do well, so that we kind of programmed to invest abroad. But now 2 years in a row, Japanese equity doing good, so that will start making an impact to the people's mindset. So I believe sooner rather than later, Japanese investors' money will more put into Japanese equity, I think.
And gradual change. Thank you so much for joining us. He's the Monex Group Executive Chairman Oki Matsumoto with his views on where the Japanese markets are headed and a lot of optimism over assets here. Still ahead, South Korea's president approving a plan to develop a large fossil fuel deposit discovered off the country's coast. We'll discuss the implications for the energy transition next. This is Bloomberg.
Take a look at energy commodities at the moment. This is a picture when it comes to oil, New York crude, as well as what we're seeing across natural gas futures as well. Oil, they're extending those losses still. We saw that industry report reporting to an increase in US stockpiles, adding to just already existing bearish sentiment that's really been consolidating over the past couple of months. That API report really just seeing more expansion by 4.1 million barrels last week. We're down, about 5% this week for crude, following that decision over the weekend by OPEC Plus to start unwinding supply cuts in the fourth quarter. Natural gas, though, headed in the other direction. We're seeing upside of about 1.5%. This after we did see earlier declines. US nat gas falls a little bit earlier in the session. That Norway outage, regardless, expected to be brief, and that had been really driving a lot of these supply worries, along with, of course, heightened demand amid hot weather across many countries. All of this has been pushing gas prices higher over the past 3 months. But fresh supply might be on the horizon after South Korea said that a study suggests a large deposit of oil and gas in the waters off its coast. Let's get to Seoul now. Our energy reporter there, Hee-Soo Lee, as well as the Bloomberg NEF APAC Head of Research, Ali Azadi, to talk through the implications. So, Hee-Soo, let me start off with you. Tell us what we know about this gas discovery, who would benefit, and how quickly can this come to fruition?
Yeah, right. The South Korean president has announced on Monday that the country has discovered a deposit in the waters off the southeastern coast that may hold as much as 14 billion barrels of oil and gas. Now, the plan to develop this project has been approved, and drilling will start at the end of this year to evaluate the actual level of reserves, and we'll get to know the result in the first half of 2025. Now, the Energy Ministry said the drilling will take place about 7 to 10 years, and once the exploration is complete and once they confirm the economic viability, then South Korea can actually start commercial production.
How will it impact Korea's broader energy policy?
So the fact that Korea is so excited about this new discovery is because Korea imports all of its fossil fuel needs from overseas. And the plan to develop this project is actually a part of Korea's effort to reduce its reliance on energy imports. And it also comes only a few days after the country has announced the long-term electricity supply and demand policy plan, where it's planning to increase the share of nuclear power and renewables from the power mix, which is also going to ultimately help the country reduce its dependence on energy imports. Now, this is a trend that we are seeing more across the globe after the energy crisis in 2022, where countries are looking to increase their ability to reduce their dependence on expensive imported fossil fuels.
So, Ali, let me turn to you. What's the long-term demand picture looking like globally?
So when we look at natural gas specifically globally, right now we actually see under our economic transition scenario between now and the early 2030s, a moderate decline in demand primarily driven by lower consumption in the power sector as regions such as Europe accelerate away from reliance on burning natural gas for power generation, while in emerging markets, still the relative poor economics of natural gas compared to coal hampers uptake. After the sort of early 2030s, again, if you look at it under an economic transition scenario, which excludes any of our climate goals, then we can see actually demand rebounding, particularly driven by industrial sectors such as use of natural gas as feedstocks for chemicals towards 2050. So in that scenario, by 2050, we are looking at a world where we are consuming 12% more natural gas compared to 2022 baseline.
How does this potentially impact energy transition efforts? Is gas really, when it comes to being a transition fuel at this point?
Yes, so proponents of natural gas often refer to it as a transition fuel, and certainly better, efficient use of existing gas infrastructure can help with the transition. If you look at markets such as the US, where the advent of abundant, cheap shale gas ushered in a lowering of dependence on coal in favor of gas, certainly had an emission impact in terms of improving emission reduction. Open cycle gas turbines are also good technology in terms of supporting uptake of renewables. But when we look at it globally, from the perspective of investment in new infrastructure for gas, particularly around new upstream production, such as the field that's being discussed here in Korea, the problem is that the emission math doesn't add up. If you look at in the short term, one of the challenges with natural gas, with its main component being methane, is that methane is actually a powerful greenhouse gas, particularly when you look at it on a shorter time span. While methane does decompose and over a long term has a lower emission impact, in the shorter term, it actually causes more global warming. So handling unabated methane emissions is actually a big challenge that already the industry faces. Over the long term, the additional challenge with investing in new upstream production is that you're looking at recovery periods where you run into the remaining carbon budget not being available. So, for example, in the case of Korea, Korea has a net zero by 2050 target. Even if this new field is capable of producing economically, if you look at economic production from early 2030s, then essentially we don't have enough time to meet that 2050 net zero goal to make sure that the investment is financially viable.
Ali Zadi, our Bloomberg NEF APAC head of research, as well as energy reporter Hee-Soo Lee with their insights on the broader energy market. But another story that we're following in the industry, Tellurian shares rallied in New York, with Saudi Aramco and Woodside said to be in talks to invest in one of its LNG plants. Sources say the U.S. firm is reviewing various offerings from the energy companies related to its proposed Driftwood plant. They also say a potential deal may include Mid-Ocean Energy, a subsidiary in which Aramco holds a stake. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're tracking when it comes to trading in Aussie assets. Futures looking pretty flat at the moment, and the Aussie dollar also coming under a bit of pressure. We lost about 0.5% after first quarter GDP numbers, as well as some of the moves that we saw in trading in the yuan. At the moment, we're hearing from the RBA Governor Michelle Bullock in her testimony to the Australian Senate this morning. Among other things, she's been talking about the consciousness of the RBA when it comes to the cost to the economy of higher inflation, saying that some of the releases around the budget when it comes to the energy rebate is not material for CPI forecasts and unlikely to impact core inflation. Also saying that the willingness of the RBA to take more action is there. If CPI is not headed back to that target band, they will take action, but that the board currently considers monetary policy settings at the moment to be restrictive. Commenting on the labour market as well, saying that it's easing on a number of different measures there, and that inflation, if it continues to be sticky, they won't hesitate to hike again. If the economy is much weaker, they'll be ready, though, also to ease as well. So data-driven is still how the plan is playing out, but really also talking about the fact that demand is still above the economy's capacity to supply, and the fact that Shery in Australia, as we've seen in a number of other economies, that inflation, she says, is only coming down quite slowly.
Yeah, and Heidi, we're headed towards the South Korean market opens, and after revised central bank data showed that the economy grew 3.3% on an annual basis in the first quarter. That's slightly lower than the previous estimate of 3.4%. For more, let's bring in our Asia economy and government senior editor Brian Fowler. Brian, so a lot of technical details in this data set. What's the bottom line?
So on the surface, the BOK's revisions look a little bit bland. They left the first quarter GDP growth rate at 1.3%, which we also saw in the earlier data. But what they also did is they changed the base year on which they estimate the size of the economy. And based on those changes, the BOK believes that the economy grew, on average, 4.9% faster over every year since 2020, excuse me. And as a result of that, the size of the overall economy is about 7% bigger than we thought it was. So it's a bullish case for South Korea's economy.
Brian, does this sort of move the needle when it comes to expectations from the BOK?
Yeah, it really could. As a result of the larger economy, this we would expect to push down debt ratios for the national government. It would also push down debt ratios for households that have borrowed a lot of money, making those look a little bit less worrisome. That could give the BOK the confidence it needs to go ahead and pivot to a policy easing. Keep in mind that the BOK was at the front of the curve as we exited the pandemic with rate hikes. So it wouldn't be that shocking to see the BOK get ahead of the Fed in starting to ease. Bloomberg Economics thinks a rate cut could come as early as August.
Our Asia Economy and Government Senior Editor Brian Fowler there. Let's take a look at some of the other corporate stories that we're following. A group of current and former employees of OpenAI and Google DeepMind are calling for protection for speaking out on the risks of AI. In an open letter, they say as long as there's no government oversight, employees are among the few who can hold firms accountable. OpenAI has faced controversy about its approach after dissolving one of its most high-profile safety teams. Intel is selling a stake in a plant in Ireland to Apollo Global Management for $11 billion, boosting funding for a massive expansion of its factory network. Meanwhile, CEO Pat Gelsinger has taken aim at rival NVIDIA in the fight for AI chip dominance. He used the Computex, a trade show, to hit back at Jensen Huang, who earlier had said that traditional processors like Intel's were running out of steam.
We look now to have 1 billion transistors on a single chip, and even looking to 1 trillion transistors in a single package by the end of the decade. And unlike what Jensen might have you believe, Moore's Law is alive and well.
And these are some of the stocks that we'll be watching when trade opens in Korea, Japan, and Australia. VHP heading into mediation with union leaders in Chile in a bid to avoid a strike after failing to reach an agreement in regular negotiations. We're also watching Santos, Australia's federal court imposing a penalty of nearly 3 million Aussie dollars on a subsidiary for breach of record-keeping rules. Japan Airlines says its first quarter was weaker than expected as the carrier grapples with a weekend that's continuing to depress outbound travel. And keep an eye on Japan's Idemitsu Kosan after it entered into a 10-year naphtha supply agreement with Qatar Energy. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens, and Haidi will be watching if we continue to see that downside pressure that we saw in the previous session. Given all of the volatility around India's elections, we saw really the biggest loss in the Indian stock markets in about 4 years.
Really a seismic result, right? Given the expectations that Narendra Modi would be coming away with a much, much stronger outcome, and certainly that he would have been hoping for that as well. But does it really kind of reset expectations when it comes to India's growth and its future? We'll be trying to get some more analysis on that this hour. But of course, Shery, in the meantime, it has huge implications across the rest of the emerging markets complex as well.
Yeah, and of course, we'll be watching how the Japanese yen is also trading at the moment, because when you're talking about implications for the Bank of Japan, we got those base pay numbers really rising by the most since 1994. So does that mean that we're seeing a virtuous cycle here in Japan? Demand-driven economic growth is a big question. Take a look at how assets are coming online. The Nikkei down 0.5%, while the Japanese yen is holding at that 155 level. A little bit more downside pressure. We saw a strengthen against the U.S. dollar, but after those base pays numbers and really the results of the Shunto wage negotiations, we're seeing a little bit more downside pressure. The 10-year yield holding steady at the moment. But take a look at how the Kospi is coming online as well, because we had Korea keeping its first quarter GDP growth estimate intact, but because of some changes to how they're calculating the size of the economy, we're actually seeing it that it was bigger than was previously thought. Now, that has really benign implications for the BOK when it comes to financial risks and the actual size of household debt. You can see the Kospi gaining 0.8% as we see a little bit more upside for the Korean won at that 1374 level against the US dollar.
Take a look, Shery, at how we are seeing just that staggered start to trading. Of course, always a little bit tricky to get a read in the first couple of minutes, but we're looking a little bit negative when it comes to that lead that we've gotten for Aussie stocks at the moment. We are still hearing in terms of the commentary from the RBA Governor, Michelle Bullock, in her testimony to the Senate this morning, and really acknowledging the weakness. It is the very, very weak state when it comes to household spending, household confidence in Australia, and really on the balance of things saying that if inflation continues to be sticky and continues to take time to come down, and really there are concerns about it potentially being revived, that the RBA would take action. At the same time, she also says that if weakness in the broader economy continues to play out, then they would also not hesitate to ease too. So really trying to kind of speak to that balance of risks, Michelle Bullock there, really conscious when it comes to what it is costing the broader economy to have that higher inflation. So a little bit of weakness there in the equity session. The Aussie dollar also off 66.44 is where we're trading. Of course, we did have that weakness after the GDP numbers, as well as some moves in trading against the yuan as well. Some of those concerns over China continue to play out when it comes to proxy assets in Australia. And we are watching treasuries and really bond yields across the region, given that we've seen that big rebound. We also heard from the likes of Larry Summers, the former US Treasury Secretary, saying that long-term Treasury yields are seen to be higher by him. For more, let's bring our executive editor for Asia Markets, Paul Dobson. So, Paul, this kind of resetting of expectations on the Fed, does the data now support a stronger view?
I mean, you know, there's a few pretty difficult-looking data points in a row for the US, and there are signs suddenly emerging that the economy is starting to cool. First of all, we had the revisions to the GDP numbers. We had some discontent in the housing market. We had some wobbles on consumer spending as well. And now the jobs data is starting to look a little bit weaker as well. So that has been lending that support to the Treasury market. We've seen a pretty big rally. OK, so we haven't, you know, taken out any major sizes and scopes in terms of how low we are just at this moment in time. But we are starting to get that pricing for a cut coming back up through the months now. November seen as a certainty in the market, September looking like a possibility as well. And we get a couple more of the PCE numbers before we get to the Fed's midsummer decision. So there's possibilities there. The rate calls could continue to be revised. That is lending some strength into local and global markets as well as far as bonds are concerned. But what I think is interesting is that this time we're not seeing so much of that feed across into equities as we had beforehand. So bonds rallying, but equities are kind of flatlining or not looking all of that well supported despite the lower yields. And that does tell you that there's a little bit more concern about exactly where the economy is going from here.
And Paul, we saw a roller coaster ride when it came to Indian stock markets, losing the most ground in about 4 years. What are you watching out for today?
Yeah, I'm not sure about roller coaster ride or straight down plummet, parachute jump maybe or something like that.
It was a record highs the previous session.
Yeah, okay, I'll give you that. This week, yes. I mean, I think that, yeah, there's a lot of risk out there still. First of all, the coalition kind of make up what the demands are in order to bring that together and get that done are going to be important. It's not guaranteed that there won't be some requests that sort of weaken some of the economic reforms that the market had expected the Modi to be able to push through in the coming years. So that may weigh on equities further in the short term, that uncertainty, and then the longer term outlook, even if there is a coalition done, is that progress will be slower, and therefore even if the bull market for Indian equities over the longer term can continue, it's not going to be roaring at the same pace that it was beforehand. I think what's interesting as well is the fixed income story, where previously the expectation had been that a large majority in the election would allow a Modi government to curb back its borrowing and be very good news and supportive for the bond market. Now there's concerns that that's not going to happen either, and so some pressure upwards on India's bond yields. And finally, you know, the currency market as well is going to be really interesting to see. You know, we had some pretty big weakness in the past couple of days. The expectation is that the RBI kind of absorbs some of that, but we're close to those record low levels, so something to watch out for there. See just how much market uncertainty and doubt and outflow there is. Maybe the currency will be a pretty good sort of way to monitor that.
Bloomberg's Paul Dobson there. Great to get your views. I was actually hear directly from Prime Minister Modi. He's vowing to stay on as Prime Minister even as the opposition delivers an election surprise.
Today's victory is the victory of the world's largest democracy. This is the victory of unbreakable allegiance put into the Constitution of India. In our third term, this country will see a new chapter of big decisions. This is Modi's guarantee.
Let's get to Bloomberg Markets Asia anchor Haslinda Amin, who joins us from New Delhi. I mean, as we know that it's difficult to predict the world's biggest elections, but what happened?
You know, Shery, it feels like we're waking up to a new India, a democratic India. Yes, we know that India is the largest democracy in the world, but over the last 10 years, it's been governed by an increasingly autocratic leader in the form of Modi. And it's different now. The results show that. Now, as far as where it landed, Modi's BJP party secured 241 seats. Yes, it got the most number of seats in terms of parties, but not enough to form a single-party majority. It needed 272. Essentially, what it means is that Modi will have to tap its allies in its alliance, the two parties in its alliance. The thing is, the two parties are unreliable. The leaders have known to flip-flop. So it remains to be seen if they will go the Modi way or, in fact, tilt over to the opposition. Fair to say the opposition themselves have done way better. They've secured about 240 seats. And what they need to do is perhaps lure Modi's allies. And you may get a situation where we could have a hung parliament. No clear majority either way. That is the biggest concern in the market right now. Now, in terms of policies, we heard from Modi, there'll be continuity. He will ensure growth, but the question really is whether Modi will remain the prime minister, whether the BJP will be the leading party out there. So lots of questions that are being asked right now.
And really fascinating to see where the main battles were fought in this election.
Well, when it comes to India, the battlegrounds are, in fact, in the Hindu heartlands. We talked about the Ambanis, we talked about the Adanis, we talked about the billionaires in India, but this is a country of 1.3, 1.4 billion people. It is about the rural poor. 900 million people still live below the poverty line. So Uttar Pradesh is key. This is the most populous state in the country. At the last election in 2019, the BJP secured 62 seats out of the 80 up for grabs. This time round, they secured only 40. Therein lies the weakness for the BJP. And what is interesting is Uttar Pradesh is home to where Temple Ram is. Now, Temple Ram was inaugurated by Modi earlier this year. It's controversial. It is a temple that replaced the mosque that's been there since the 1850s. It is a controversial move, but people had thought this would work in his favor because, after all, 80% of the population is Hindus. But it has worked against Modi. People are saying they're not interested in Modi's religious politics. They're interested in the bread and butter issues, their employment, their food on the table. They've voted really clearly.
And Haslinda, when it comes to the broader macroeconomic fundamentals, though, I mean, you mentioned those challenges, but at the same time, this is the fastest growing major economy in the world. The S&P just recently hinted that potentially they might upgrade their credit rating. So when you have a more divided India, what are the implications for the economic outlook?
You know, Shery, you can't take away from the fact that the stars are aligned for India's economy. You talk about possible upgrade by S&P. It's growing at 8%, which is the fastest growing major economy in the world. It has a demographic that is enviable by any country. 80% of the population below the age of 35. It is amazing the potential that India has. We have the likes of Goldman, the likes of Morgan Stanley saying you got to buy the India story. That growth story remains intact. But for India to be a middle-income country by 2047, which is the target right now set by Modi, it needs to grow by 9 or 10% in the next 20 years. And for that to happen, we need to see reforms in the economy. We need to see land reforms, labor reforms. These are the choke points for the economy. And unless those reforms are implemented, it is very difficult for India to grow at 9 or 10% that it needs to reach that middle income status.
Our markets co-anchor and chief international correspondent for Southeast Asia, Haslinda Amin, there in New Delhi. Take a look at some of the companies that we're watching very closely. We're just about 12 minutes into start of trading here across major Asia markets. Samsung, of course, that heavyweight. We're seeing a jump of, we had been at as much as 3.6% earlier. We're off those session highs so far. But the NVIDIA CEO denying a report of Samsung's HBM chips failing to pass qualification tests. So NVIDIA working to certify its HBM. We did hear from Jensen Huang on Tuesday that the company is still working on the certification process there. Also watching BHP as well in terms of one of the big players in Australia. Turning to mediation now, Chilean miners are seeking their share of the copper boom, with these talks kind of casting light on the tensions that we're seeing from this recent rally we've seen across the runaway prices of copper as well. So this will potentially conclude on how the Escondida issue will pan out as well. Also watching the likes of some of these Japanese airlines, Japan Airlines there in focus. The first quarter through June was weaker than expected. The Golden Week holiday was underwhelming when it comes to travel volumes, according to one executive. So that softness there being reflected in the share price, Shery.
Haidi, still ahead, our exclusive conversation with Suntory CEO Takeshi Inami. We discuss the business outlook next amid yen weakness and, of course, weaker growth across the economy, but a lot of optimism about a potential virtuous cycle coming from BOJ policies. This is Bloomberg. Welcome back to the Asia Trade. This is a picture when it comes to Japanese assets. We're seeing downside of about 1% on the Nikkei. Industrials, energy, and financial companies leading those declines. The Japanese yen reversing some of those earlier gains, and really a lot to do with what's an expected virtuous cycle potentially coming from BOJ and government policies. Japan's base pace rising the most since 1994. We are now seeing the biggest wage increase in 3 decades starting to take effect. If you switch the board and you see the labor cash earnings, you can see that terminal chart showing you the big pop in recent years. But let's discuss the outlook for the Japanese economy with our next guest, who runs one of the country's largest beverage companies. Joining us here in the studio is Takeshi Niinami, President and CEO. Suntory Holdings is also chairperson at the Japan Association of Corporate Executives. Great to see you in person. So what do you make of these wage increases? Are they sustainable enough, and are they happening across Japan or mostly across larger companies?
I'm pretty much optimistic about the wage increases. The reason behind is a huge shortage of labor. So business has to keep raising wages. Otherwise, we can't secure laborers. So this is the really thrilling situation for the Japanese economy going forward.
Do you think the Japanese household feels that way as well, in a way that they're confident enough to actually go out and spend and actually turn it into a real demand-driven sort of inflationary outlook?
I don't think the confidence is there. The reason behind is I think it's been almost 24 to 25 months of the negative real wage. So the news of the lots of news that big corporations decided to increase wages, but the inflation is more and surpassing the increase of the wages at this moment. So households are so concerned about the inflation, which comes out of the weekend, plus possible crisis in Middle East and Ukraine. Lots of uncertainties around.
It doesn't help energy prices, as you mentioned, really going up because of the Middle East crisis. But really, the mentality and mindset that Japanese households do not feel richer because of these wage increases. Is there sort of a level that's best suited for the broader Japanese economy? I mean, we're approaching 160 right now.
Well, I think the current disconnect between the stock market and real economy is an issue. And we business don't think that the current stock price means very much optimistic to the Japanese economy. So we have to increase wages. We have to put lots of impetus to the workers. For example, we have the huge investment opportunities now in Japan. For example, accumulated investment amount is surprisingly $600 billion. But it's a plan. And how to let it invest, now. The reason why we can't do it is, first, the material cost is increasing. That's out of the plan. Second is we can't secure laborers. So silver lining is there. We want to invest. I mean, Japanese corporates want to invest. However, we can't secure laborers. So that disconnect exists because of the huge lack of labor.
And you talk about a disconnect when it comes to the weakening yen, right? You say that currency weakness is not just about rate differentials, it's about a differential when it comes to business investment interest in Japan. When we've seen so much more enthusiasm across financial market assets in Japan, how do you transfer that, or how do you kind of get a bit more enthusiasm when it comes to foreign investment?
Well, I think Japanese government and the business have to work together to attract the foreign investments. Japan has been saying we need investments from the world, but the situation is not enough to appeal, such as education of the children, siblings, and the language. But will be better, but we have to be serious about this opportunity, which is the one we can't miss this time. So I think the government and the business are working very hard to bring the FDI to the to the Japanese economy, I think it's a lot better than before. But we have to learn from Singapore, for example. They have the EDB, which is a one-stop shopping for the investor from abroad. And now investors from abroad have to go to the METI, have to go to the MOFA, a lot of government offices. So we, Japan, have to be serious about to bring money from the world this time.
At the same time, you're also outward looking too, right? I want to ask about Boston Beer. I know that Suntory has denied these M&A talks, but I do wonder if the sort of uncertainty and weak consumption patterns at home is making you want to look for more growth opportunities abroad. What sort of assets are you potentially eyeing at this point?
2 points I'd like to address. One, Japanese corporates are very keen to go abroad in terms of capturing the global growth. And the declining population of Japan is really demotivating us to stay here. So that's a fact. But apart from that, there is a huge opportunity of investment, such as sustainability, such as DX. And by the way, second point is we have no negotiation at all with the Boston Beer. So there's no fact. So I was so surprised to know the piece went out to the world, and I got lots of questions about that.
Okay, what about other companies though? Because we just heard that you sold a $500 million bond, which usually Japanese companies tend to do when you're investing overseas.
Well, I think two things. One, aging population doesn't mean any demand. So we have such as healthcare. We have such a division here. And the U.S., we have the still interest investing. So both. And one key thing is the landscape has changed. Even for those companies who got assets overseas from Japan, they are thinking to come back with the repatriation.
So you're raising cash, $500 million bond.
That's right.
You're looking at other investments overseas. Maybe not Boston Beer, but something else.
Well, we will keep investing to Japan, such as distillery capacity and so forth, and beverages. But one thing, aging population needs lots of need of new products, and they have money. So Japan's consumption is weak at this moment, but key thing is they need new products. And around the 30 years of time, deflation didn't push us to bring new products with the innovation. Deflation is a big stumbling block of the innovation. But now we have to produce something innovative to aging population who has lots of money.
Are you doing that right now?
Right. So our healthcare
Japan?
division is now so much a thrill.
But it's not just Japan, right? Overseas as well, that aging demographic story.
Right, exactly. We are in Thailand, we are in Taiwan, we are in China too.
Mr. Ninami, great to see you in person here in our Tokyo studio. Takeshi Ninami, President and CEO of Suntory Holdings. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how we're setting up when it comes to the futures session opening up in Europe at the moment. We're actually seeing a little bit of positivity there. Euro Stoxx 50 futures, as well as German DAX futures, seeing a little bit of muted upside. This after a softer session where stocks really fell, with oil and energy names really leading those declines. Traders are, of course, perhaps a little bit sidelined looking ahead to key US data, that ECB rate decision as well in focus. Coming up, we'll be speaking to the world's second largest construction equipment maker on the global demand outlook as well as impact of that weekend. The Komatsu CFO is joining us exclusively in Tokyo next. Take a look at Singapore and Hong Kong PMIs just crossing the Bloomberg now. We've had sort of a string of pretty mixed pictures across Asia, some of it really performing better than others. We are getting the PMI numbers coming through for Japan as well. When it comes to Singapore, this is the picture for the Lion City as we continue to see really that mixed outlook in terms of external demand. We are seeing the S&P Global Singapore PMI for May coming in at 54.2. That is actually quite a significant improvement from 52.6. So continuing to extend more growth where at a time that we're seeing a lot of these other economies falling deeper into contraction territory. Taking a look at Hong Kong there as well, we're seeing that though falling in the wrong direction really. For the month of May, we're seeing that reading of 49.2 falling into contraction territory from just above 50 in the prior reading.
And Heidi, we do have the final numbers for the May PMI composite here out of Japan as well. 52.6 is the number, slightly revised higher. When it comes to the services number, 53.8 as well, slightly higher revision there. Japan's factory PMI also returning to growth in May, turning positive for the first time in 11 months. Let's discuss the health of the Japanese economy and the global demand for heavy equipment with our next guest, Komatsu CFO Takeshi Horikoshi, joining us exclusively here in the Tokyo studios. Really great to see you.
Very see you.
So you're the second largest construction and mining equipment maker in the world. So you have a really good view of the demand outlook there for your products. That could potentially mean what's happening in the global economy. What are you seeing?
Okay, well, I can talk about only your construction equipment demand. And, for this fiscal year, which started April this year, actually, we forecast the construction equipment demand decreased by 5 to 10%, well, 2 years consecutive decrease. And on the other hand, mining equipment, which is a super large excavator, super large bulldozer, super dump truck, we can see quite a robust demand. This is because of the high price of the minerals such as copper, iron, like gold, and nickel. And only the thermal coal price is expected to decrease a little bit moderately, which leads to our weak forecast for the mining in Indonesia, in fact.
Most of your revenue actually comes from the Americas, right? About 45% or so. Is that correct? And does that help that you're seeing more of a recovery in demand in those markets?
Yeah, well, actually, the demand, our revenue came from North America. It represents 30%. And if we add South America, it will be, more than that, of course, it will be 50% or so. And the recovery, the robust economy in the U.S. helped us a lot, in fact. And but our concern as well for this fiscal year, because if the slowdown that the economy in the U.S. started, that will lead to a very difficult situation for us.
So how are you preparing for that?
Well, actually, we've been living in a very volatile market for a long time. Actually, all the time our market is very volatile. So I can say that we are very much used to it. So we can adjust our capacity or the inventory level depending on the trend of the market quite not easy, but quite easily. And by doing that, we can minimize the decrease of profit as much as possible.
The Japanese yen being as weak as it is now against the U.S. dollar has helped you, right? How do you manage those currency fluctuations?
Well, actually, that we don't take drastic action depending upon, as a countermeasure for the fluctuation of exchange rate. We have planned all over the world, and because we have, the common, what we call bill of material, and also a common production procedure, we can change the production location from one place to another quite easily. So not only by looking at the gross margin level, but also the level of production of each country, we can change the production place from one place to another. Yeah, so that by maximizing the gross profit, we can minimize the investment as well.
Has it helped you that your exposure to China isn't that big? Is it around 22% of revenue or so?
Yeah, it used to be almost 10 more. Well, 2010, our exposure to China was almost 20%, and now it went down to almost 1%, which is very small. But there is a indirect impact from China, because if the further slowdown in the economy China happened, it will decrease the mineral price. That leads to the decrease of our mining equipment demand, in fact. Yeah.
Takeshi, what are the thoughts around shareholder return strategy here?
Okay, well, not only a financial result, we are focusing upon the improvement of PBR, price-book ratio. And when we compare our PBR against our peers, and our PBR is, well, I have to say, that very small. And the one reason is that the shareholder, the investor, look at our cash flow growth ratio lower than our peers. We need to improve that. To do so, we have changed the judgment of the performance of our group company to cash flow instead of ROIC, because to show them absolute number instead of a ratio, whether it's good or not. And we need to improve the investor relation activity as well. We will improve the quality of investor relation and also the number of talks with shareholders and investors. I'm receiving the interview now. This one of the the IR activity as well. And also that we need to improve the ROE. Of course, we need to keep on the activity to improve the profitability, but also that we think that we should not be too conservative about the financial leverage, i.e., our debt to equity ratio. In fact, we have started the purchase of our own share up to 100 billion yen starting end of April this year.
Can you give us some more details on the partnership with F1 and what you hope to get out of this?
Actually, you know very well. Actually, we started the sponsorship with the Williams this year because we used to have we used to provide the parts to the F1 team in 1990s, and because not only that, but also that to enhance our brand of Komatsu, we started using the F1 because we think that the F1 is very popular. Especially in America, South America, and Australia, and South Africa, where our major customer exists.
Takeshi, when you take a look at the broader corporate landscape for Japan, obviously we're hitting sort of a moment of quite a bit of enthusiasm from foreign investors in particular. What changes would you like to further see in terms of government efforts or reforms, particularly when it comes to perhaps bringing foreign business investors back to Japan?
Okay, well, as you may know, that the Japanese market, I mean, the stock market has been improving in terms of governance, and because of the demand, request from the stock market, that we've been started to increase the PBR, so that will, I think, that attract foreign investors, helped by cheap Japanese yen as well, cheap or weak Japanese yen, I think.
Takeshi, really great to have you with us. We appreciate your time, Takeshi. Horikoshi there, who's the CFO at Komatsu, joining us in Tokyo. Still ahead, we'll be talking about what comes next for India. These election results humbling. Prime Minister Narendra Modi, the Centre for Strategic and International Studies, joins us next. This is Bloomberg.
We're now on the Indian election, and former Reserve Bank Governor Raghuram Rajan saying that the results are a victory for democracy. He told us it's a clear signal that India wants a new direction.
We have an election. The results have been coming out, and I think it's a splendid result because it tells the government it needs to change course. The old course was unviable, and we can talk about that. Of course, markets seem to be disappointed. We can talk about that also, why markets are reacting negatively. But I think what is happening today is really, in the long run, really good for India because it forces India to choose a different course from the one it has been on, a course which has led to much wider unemployment and distress than needed in the country.
Is this an election result that you see will bring the technocratic and elite South together with a more emotional and historic North? Does it bring the polarity of India together, or do we have a more separate India in 2026?
No, it's actually a win for democracy, and that's good for India because what democracy does is it allows the different paths to essentially express themselves and to negotiate. The problem earlier was India was trending towards a more autocratic country, a country with one leader who had a larger-than-life image. And that, unfortunately, meant that the BJP leadership wasn't listening to the economic news on the ground that people were actually suffering hardship, wasn't listening to the broader sense that, the weaponization of various instruments of the government to put, opposition party leaders in jail was simply not gelling. And it would have taken India down a course which was ruinous in the longer run, maybe in the short run beneficial to the big business groups. And that's why the market is reacting adversely.
Former Reserve Bank of India Governor Raghuram Rajan there speaking to Bloomberg's Tom Keane. Let's get more insight on how these election results will affect global foreign policies and the geopolitical outlay. Bloomberg Markets Asia anchor Haslinda Amin rejoins us from New Delhi. And let's bring in Rick Rosso, who's a senior advisor and chair in US-India policy studies at the CSIS. And Has, why don't you kick it off, given that you're on the ground and you've been sort of watching this extraordinary situation really play out?
Well, we've had one commentator calling this a political earthquake, totally unexpected. And the reaction in the market where at one point Indian equities slumped about 8%, that in itself says everything about the unexpected results from this election. Let's get further insights, delve deeper with Rick Rosso, senior advisor and chair in the US-India policy studies at the CSIS. Rick, good to have you with us. We heard earlier from Raghuram Rajan how the results is good for India. Do you agree?
Well, it depends on what the coalition makeup looks like and what kind of policies they're going to support. Some areas the United States cares about in terms of India's economic liberalization and a deepening security partnership that happened really well when we had a single party government. Now, when I think about two of the most likely large coalition partners that Modi will have to bring on, they've been relatively agnostic on reform, which is a good thing, and very supportive in a deeper partnership with the United States. So I suspect that the things the United States is looking at on the economy and security, that'll largely remain unchanged.
The thing is, it may be more complicated than people think right now. Rick, I mean, there is a possibility of a hung parliament. What are the prospects of that? What's the risk of that happening?
Well, there's a term that you're very familiar with, horse trading. Now that you've got one large party that didn't quite clear a majority and a resurgent Congress party, there's a number of regional parties that everybody's trying to vie for. And you put on the table personal emoluments. There might be money on the table that parties would be interested in. There could be ministerial cabinet positions. So, yeah, there still is some infighting going on. I think we can't quite say with complete certainty that Narendra Modi will be prime minister a week from now. But it looks, the signs look pretty good. I've had a lot of engagement with the two parties that are likely to make up the coalition. And it seems so far, they're relatively solid in their support for Modi as the prime minister. And again, looking at the Telugu Desam party in Andhra Pradesh, looking at the Janata Dal United, I don't suspect they're going to pull the party in dangerous directions in terms of, eroding some of the work we've done on security and commercial tie-ups.
Modi has been such a forceful personality, right, personally, politically, in terms of how he's managed the economy. Does this sort of play into what foreign partners are dealing with when they potentially, see this dynamic changing or, as we mentioned earlier, a humbling of perhaps a more diminished leader at the end of this?
Yeah, there's a number of things that he himself can personally manage. They've liberalized foreign investment restrictions, but they've actually been a little bit more restrictive on trade to try to balance India's trade partnerships. The one area that we saw Modi working on actively in his first term, but less so in the second term, was actually trying to push more state governments into making the kind of reforms that'll actually improve their local economies as well. And that's where really, at the end of the day, a lot of action has got to take place. States have primary control over so many factors of production, whether it's electricity and water and sanitation. There's very little that you can actually do from the national government level to enact those kind of reforms at state level. And sometimes people believe that states that are run by the BJP, by Mr. Modi's party, are most likely to kind of fall in line when he announces big programs. But if you look at the data on renewable energy adoption and things like that, actually states that are politically aligned sometimes are the biggest outliers in matching some of the programs that he announces from the union government. So there's a lot of good things on economic reforms at the national level, but they need to get back to challenging states to do better, because ultimately, if India is going to be that next big manufacturing powerhouse that they want to be, more states have got to start pulling at the oars on that boat.
A lot of the investor focus has been consistency when it comes to economic policy, right, and whether this means India can still fulfil its economic potential. But I do wonder, on the geostrategic, geopolitical side, what do you envision in terms of how India, perhaps under a different type of government or a different vision of government, deals with partners like the US and also with China?
Well, I think the threat that China poses, of course, it crosses many domains. You've got the border area where today China actually occupies hundreds of square miles of Indian territory. You've got the maritime domain where the PLA Navy is an increasing presence in the Indian Ocean. Trade imbalance, cybersecurity threats, and even Tibetan Buddhism, where everybody's wondering what the future is going to lie when the Dalai Lama passes. So the threats that China poses are kind of across multiple domains. And that means India, knowing that they're outmatched by China on most of those fronts, need strong partnerships. It's not just the United States, but Japan, Australia, other key partners like that. So I suspect that because some of the drivers for India's new kind of way they've been stepping out of security and tightening partnerships with the United States and others, the drivers for that aren't going to change. So I suspect that it may slow, the direction may change a little bit, but the main drivers are going to be unchanged. So I think security ties will continue to grow.
Rick, we've heard again and again that India has earned its place on the global stage, and it became quite clear last year at the G20 how global leaders went up to him, gave him the kind of respect like any other leaders of the bigger world. I'm just wondering, does the result change Modi's standing on the global stage at all?
Yeah, it's tough to believe that a rural farmer in Uttar Pradesh wakes up every day happy that all this time and money and energy was spent really contributing to issues on the global stage. There's very little that India got in return. You haven't seen a big spike in foreign direct investment. India's trade flows are mostly increasing the same way they were before India tried to take these leadership roles. And a lot of the countries with which India's tried to build partnership through the G20 and other forums, ultimately these countries want investment coming from India. They want aid. They want access to advanced technologies, particularly defense technologies. And India just doesn't have a lot on the table in those areas. So I think India's splash on the global stage, it looked great. Certainly brought some small bits of development to different parts of the country that hadn't seen it. But I have a strong hunch that that's not really what drives voter interest the day you go for elections. They want jobs. They want economic development. And, we've all seen the jobs numbers aren't quite as strong as we'd all like to see.
We keep talking about India and its relationship with the major powers, but what's really important is India's relationship with its immediate neighbors. We're talking about Pakistan, with Maldives, and there's been a lot of tension. How might this play out for their relationship?
Yeah, it's wavered back and forth since the Modi government took office, where you began to see a real reset on trying to engage the region. And that meant that, some of the areas of cooperation the United States had on Africa and Southeast Asia with India really kind of fell off the radar screen. But that's because from India's vantage point, looking back 10 years ago, Beijing had actually built up stronger relations with most of India's neighbors at that point. India's done pretty well. They have a relatively supportive government in Sri Lanka, although that's went back and forth. Same with Maldives, relatively anti-India government right now, but it succeeds a government that was very pro-India. Nepal, they're taking small steps to boost relations. Bangladesh has been a relative success story. So it's a mixed bag, but I think India does very much realize that its own neighborhood is being contested by Beijing, and to have direct neighbors more supportive of China's interest than India's, despite the fact they feel that there's this strong cultural heritage, that's very striking. The question is, can the United States find ways to actually boost and support India's own role in the region? We've oftentimes approached the region with our own interest and vantage points. So that's been, I'd say, a little bit of an area of frustration and friction between the United States and India.
Rick, really great to have you with us. Rick Rosso, who's a Senior Advisor and Chair in US-India Policy Studies at CSIS. Of course, our Bloomberg Markets Asia anchor, Haslinda Aman, who's with us in New Delhi today. Well, today's Big Take Asia podcast also digs deeper into India's elections. You can hear what the Carnegie Endowment for International Peace thinks the result will mean for the country and for the rest of the world. You can listen to that on iHeartRadio, Apple Podcasts and Spotify. New episodes of that podcast dropping every Wednesday. And Bloomberg's Monex Group also dissects what led Prime Minister Modi's near miss in the latest India edition newsletter. She'll also be participating in a webinar with Axis Bank Chief Economist Nilkanth Mishra. That's at 8 a.m. India time. More ahead on the Asia trade. This is Bloomberg.
You're watching the Asia Trade. Here are the latest corporate stories that we're following. A group of current and former employees of OpenAI, and Google DeepMind are calling for protection for speaking out on the risks of AI. In an open letter, they say as long as there's no government oversight, employees are among the few who can hold firms accountable. OpenAI has faced controversy about its approach after dissolving one of its most high-profile safety teams. Intel is selling a stake in a plant in Ireland to Apollo Global Management for $11 billion, boosting funding for a massive expansion of its factory network. Meanwhile, CEO Pat Gelsinger has taken aim at rival NVIDIA in the fight for AI chip dominance. He used the Computex trade show to hit back at Jensen Huang, who earlier said traditional processors like Intel's were running out of steam.
We look now to have 1 billion transistors on a single chip, and even looking to 1 trillion transistors in a single package by the end of the decade. And unlike what Jensen might have you believe, Moore's Law is alive and well.
Take a look at how we're setting when it comes to US futures and futures with markets across Taiwan and China set to open in the next hour. We are seeing broad optimism there when it comes to the US trade, despite, of course, the last few sessions really being dominated by that resumption of the Treasury trade on the bets on faster pacing when it comes to Fed cuts. That is it for the Asia trade. The China show is next.